Welcome to the DJE podcast, where you will learn about real estate investing from real-life examples. Here's your host, Devin Elder.
Oh, hello, and welcome to the show. Thanks for joining us today. My guest is Litan Yahav, and he is a real estate investor, but he's also a founder of a number of software companies. And the one he's currently involved with and grinding away on is called Vyzer, Vyzer.co. And what it is a platform to aggregate your passive investments. So you're investing with this deal, and if you're listening and you've had that experience, it gets unruly after a little while. You got all these documents coming out, you got distributions to track, and it gets more complex over time. So they create a software as a service solution, browser-based, that you can log in and automate a lot of this stuff, track a lot of this stuff, do forecasting. Really cool platform. I'm a limited partner or an LP in many deals, and I have a ton of K1s and a ton of distributions. So I feel the pain as a user, and that's why I wanted to get Litan on the show to just kind of talk through it. But aside from that, we spend kind of the first half of the show talking about his experience as a limited partner. You know, they had a liquidity event, sold a company, and real interesting. He's based in Israel, and because of their mandatory retirement system, Israelis look at investment different. They basically try to invest everything because their retirement's already squared away. So very active investor, has been a limited partner since 2015 in a lot of deals. And he's got this whole kind of way of looking at things and investing that I think you as a potential limited partner or limited partner will definitely get some value from. So that was our episode. Had a great time with Litan, and I think you're going to enjoy it. Before we get to that, if you're listening to the show, thank you. Appreciate you spending some time with me and our guests. Nothing would mean more to me than a 5-star review. It's easy to do, and it on Apple, and it helps out with the algorithm, right? It helps out with our reach on this show. So I'd like to ask you for a 5-star review if you enjoy this show. We're going to have a word from our sponsors and then get into the episode. Here we go. This episode is brought to you by DJE Texas Management Group, a San Antonio, Texas-based real estate investment firm with a track record of transacting on several $100 million of multifamily, land, and industrial deals throughout Texas. DJE's been in business for over a decade and is approaching 100 team members in San Antonio. To learn more about DJE, visit djetexas.com or the link in the show notes of this episode. This episode is also brought to you by apartmenteducators.com, a complete ecosystem for professionals to learn how to find, finance, and operate large multifamily properties for profit. You can get started with a free mini course and learn more at apartmenteducators.com or visit the link in the notes. Litan, welcome to the show. It's really great to have you. I want to dive in on a lot of your experiences over the years as an investor and a tech founder and all those things. And before we do, want to get some background on you personally and what got you into the real estate space in general.
For sure. Devin, thank you for having me on the show. Always a pleasure speaking with a fellow Go Bro from Go Button. So shout out for that. So my name is Litan. Personal background, I'm 40 years old, married, 3 kids, born in the States, moved to Israel when I was a kid, served here in the military for 6 years in the Navy, and then went to school. We go to school when we're older. So I went to college when I was 24, studied law and business, worked as a sailing instructor while doing so. And then during college, sort of joined this entrepreneurship program where we founded our last startup, me and my current co-founder, in a very weird industry. We did 3D imagery for diamonds and jewelry for trading them online. We just found this need for this very archaic industry, and we found a technological solution, launched that. It went very well. Sold that company back in 2015, made some money, and stayed on for a few more years to scale that up with offices around the world, a few hundred employees. But at some point, sort of, we had enough. And in 2018, me and my co-founder moved on. Now, just like a minute about that exit. So we saw a company. When you sell a company, there's some PR around it, and then you get approached by a lot of wealth managers, financial advisors, stuff like that, wanting to manage your money, some private banks. And the cool thing, or the weird thing, or the different thing in Israel is that everyone here does real estate abroad passively. And the reason we do that is because there's a sense here that your retirement is set, because the equivalent of the 401k in the US is mandatory in Israel. You don't have a choice, neither as an employer or an employee. So you have that feeling that, all right, I have these savings that if I do retire at 60, whatever, then I'll get that. But any excess cash I have, I want to go and find a way to multiply that. And what better way to multiply that than to invest in real estate? And so that also created a situation where there are a lot of Israeli real estate operators, sponsors, syndicators that do real estate abroad in the US and in Europe. And so back to so the exit. So we decided we knew people and we trusted these people, and we just started to invest with them. Our first two deals weren't even passive. We had this company that had a full turnkey solution of single family homes in Ohio. We bought these 2 single family homes in a suburb of Cleveland, and they just turned out to be a shit show. It was a bad experience investing in active real estate. And simultaneously, we also put some checks into some syndications as LPs, and they were performing so much better and such at lower headache than actively investing. And we're like, shit, why would anyone want to do this if I can do that? And we just said, all right, from that moment on, we're not buying any more single families or actively managed stuff, because we wanted the passive stuff. And we just doubled down on investing as an LP. Me and my co-founder just did everything together. And over the years, we only invested at the beginning with people we knew, with good friends or good friends of good friends, so that we had that level of trust that was very high. One, that they knew that what they were doing, but two, more importantly, they would not screw us over. And so we deployed cash into a bunch of those deals, learned some lessons. And then at some point, we exhausted those connections. And we also wanted to, almost all these deals are in the US. Why would I want to invest with an Israeli who does that in the US? I prefer to let me go find an operator who does real estate in the US and invest directly and get that. And anyway, that's one of the reasons I joined GoBundance almost, I'd say 3 years ago, 2.5 years ago, to do that. And that's a whole different story. But so that's how we got into real estate. We've been doing that for the past 8 years, since 2015 when we sold the company. I'd say we did probably more than 30 deals over the years with 12 different operators in the US and Europe. And we can dive into that. We can dive into any aspect you'd like, but I'll just fast forward and finish my background. All right. So we did that, left the company in 2018, iterated, because we're tech guys looking to build another startup, looking for ideas to build and stuff to do. And while doing that, we also started managing our wealth, our money. And we couldn't find a place to do it. And so our spreadsheets became insane. At some point said, screw that, let's just build ourselves a piece of software to automate the whole tracking process of these passive investments, alternative investments, which you cannot link. You can't, it's really hard to stay on top of everything. And we decided to build ourselves a piece of software to do that. And then a bunch of friends wanted it as well. And we're like, wait, there might be a whole new business here. And that's why we founded our current company, Vyzer, which is essentially out of our own needs to manage our money and the money of people like us that have that type of complexity. They have these LP positions. They don't have, hundreds of millions where it makes sense to have a family office. And so anyway, that's what brought us to where we're at today, which is Vyzer. And we can dive into that as well if you like, but take it wherever you think would be interesting.
Awesome. Thanks for the overview. I appreciate that. There's a lot in there that I want to get into. Another GoBro that I was on his podcast last week, and he said something on Twitter. He said, your profits, the profit I'm excited about is revenue minus expenses minus headaches. That's the filter he was looking at businesses through. So there's a million things we could do that are profit minus expenses. Looks pretty good, but as an active real estate operator, I'm an active real estate operator. The headache component of that equation is massive. And so if you're really looking at just deploying capital efficiently and you remove the headache from it, yeah, 100%. So that seemed to be you guys' experience. I'm curious, you started with friends and relationships, very common. What do you guys look at when you're vetting operators now? Are there common traits among good operators or things you've seen over the years to go, I think that's an operator I want to learn more about, or I think that's an operator that I should stay away from? There's a lot of LPs, a lot of passive investors listening to this, and, would love to get your take on how you kind of look at that today after everything you've been through.
Yeah, I mean, it's pretty obvious to say that's the biggest hurdle, right? Finding that first, second, third operator that you want to trust and invest with and put your precious or hardly earned cash into. And so for us, it's still like first and foremost, like personal acquaintance with the managing partners of that operator. Which sort of segues into one, like I actually have like these 5 pointers that I always look at when I vet an operator. They're not like rocket science, right? But the first one is that if I know these people, like, do I personally know the managing partner, the people that own the company and if I don't personally know that, then let me find someone I really trust who knows them personally. It's not always possible, right? And that's why many times we don't invest. And that's the second point with really, really big operators. It's a downside. It's a trade-off, right? The bigger the operator, the more experience they have, the bigger the team to vet deals, to communicate better and all that. My feeling though is, one, it's very hard to personally know the owners if it's such a huge operator many times. And then the second part of that is that for me, the bigger the operator, and this is like sub question 2, the bigger the operator, the more LPs they'll have, the more cash people need to deploy into it. That means more deals they need to go and vet and provide. And that tends to be like a situation where you have these really big operators sending you deal flow every other week. And it's like, all right, they might be great, but it's a numbers game. At the end of the day, they are going to fail on some of these deals. Not all of them are going to be like home runs. And I'm not saying it's a bad thing. I'm just saying, like, the more they do, the higher the chances that one of those deals is going to fail. And then I prefer to take the other risk, right? There's also a risk investing in the smaller operators, but at least for me, it's like, if I go to the extreme other side, where there's an operator that does one deal a year, right? That's like the small operators, they are going to kill themselves to make sure that deal succeeds. Like, because they have a small number of LPs. Those LPs need to be super satisfied. That GP or the operator is going to do whatever it takes to succeed. Anyway, so that's like, for me, that's number 2. Number 3 is so this is a technical question or 2 technical questions. One is, what happens in a refinance event? And this might sound like stupid, right? But it's like, for us, it helps us first understand the deal better. Second, when you speak with an operator about refinance or refis, it gives you a sense to, all right, do they know what they're talking about? Do they answer honestly? Do they go and check? Because over the years, sort of, I've had refinance events happen in these syndications, and it was sort of surprising. What do I mean by surprising? These deals, you put $100,000 in or 50 or whatever, and you're supposed to get a certain amount of cash on cash return annually, right? And then everything above that, the waterfall kicks in. And then what happens in a refi event? Because let's say you put $100,000 in, you get 8%, which is $8,000 a year, fine, every quarter, like distributed every quarter. But then you get $70,000 back after a year in the project because there was a refinance event. So you have $30,000 remaining in the deal. Well, all right, you got cash back home. What happens now? Let's say it's a 7-year, 8-year deal. What happens from that moment on? You have $30,000 in. Do you still get 8% on the $30,000? Do you get 8% of $30,000 and then the waterfall kicks in, like everything above that, or what happens? And I'm not saying that there's a right or wrong answer here. I'm just saying that I've spoken with operators that I never met before, and they're pitching me deals, and then I'll ask that question, and then they'll just directly answer, yeah, of course, it's 8% of the 30,000 remaining. And I'm like, are you sure? I mean, is it? Do you want to check? No, for sure. And then I'll finish the conversation and say, all right, listen, on that point, check that out for me and get back to me, right? And then they'll get back to me and say, oh, you're right. It's not that. There's a different type of structure for that distribution. And again, there's no right or wrong for me. It's just like, I want to see understand like what people have thought about. And the second thing in terms of refinance, and I think during this upcoming period in particular, is it is going to be very, very hard for, I think, operators to add potential refinances in their projections, at least in the near future, with interest rates so high, I think. And this is from an unprofessional opinion. And so when I see deals looking the same way they did a year ago, that's also a red flag. So anyway, that's the refi. And then the second, I don't remember where I'm at already, but then there's the waterfall. Like, what does it look like? And again, this is related to the size of the company. The bigger the company, the bigger the operator, the less investor friendly the waterfall will look. So I've seen waterfall, and waterfall, again, for those who don't know, and you can probably explain this better than me, right? But you have this preferred return, usually 7-8%. And then there's a definition. All right, what happens to the profit above that? What's the split between the operator or the GP and the LP? And then I've seen I've even seen 90-10, like to really, really early emerging managers. The most common I've seen is 70-30, but then I've also heard 50-50, which is fine. It feels to me like the bigger the operator, that's going to be the split. And obviously, because it's a big company and they need I understand it. No right or wrong. Just for me, I prefer the more LP friendly terms in that sense. Now, I do think, and this is really important, I think that, like you mentioned, it is such hard work to get these deals through and to make them work and profitable. I think the GP should be incentivized and should make a ton of money because you guys are doing all the work. Anyway, but so that's it. I don't know if I forgot something, but that's my 2 cents.
I love it. There's a whole lot there, and that's a whole lot of things for LPs to think about. It is interesting trying to find kind of the sweet spot where your first time out syndicating a deal, maybe it's friends and family, or as a friend of mine says, you're raising capital from friends, family, and fools on that first deal. And if you can get it to go well, now you're building your track record, especially if you can get it to go full cycle. And that may take years, but if you're a sponsor, you start throwing up some full cycle deals on the board. Okay, now you're really getting somewhere. But yeah, time goes on, and we've kind of gone through that too. Our operating costs used to be zero. It used to be my time. And it was like, I didn't need to really do anything. We could close one deal a year and my expenses are covered and we're fine. Then you start kind of expanding, bringing on staff. And at some point, you need to have some kind of deal flow, but you still never want to get into a bad deal. So it's just kind of a balancing act. And then, yeah, those bigger sponsors with a big track record and a ton of full cycle deals up on the board, they're going to probably start to change their splits, more towards them. And I agree, it's not right or wrong. It's just, what they're able to kind of command in the marketplace. But that's all really, really good intel from somebody that's been doing it for a number of years now. Are you more biased towards a certain, we talked a little bit about markets, but I'd love to get your thoughts on markets, asset classes, and fund versus one-off syndication. Is there anything that you're, more biased towards out of those things?
I can't say I am. I have invested in various asset classes. And again, I don't really care about the deal. Honestly, I don't really care about the underlying asset for that matter. All I care about is the person I'm investing with and if the numbers make sense for me. That's sort of the way I look at it, right? Because once I vet the person, the operator, I probably will not, Litan, right? I will not go vet. I'm not going to go and see, wait, are the rents you're anticipating what they really should be? And does that make, I I have no way to really do that. I think it's not my job. I'll probably never be professional enough to do that. And so I trust someone to do that better than me. But I want to make sure the numbers match what I'm looking for. So for example, when you do when you do a multifamily value add type deal, there are certain numbers to expect in terms of cash flow, in terms of IRR, in terms of like the duration. And then if it's development type deal, where it's a ground up development or a flip or whatever, the numbers are very different. The time is very different. And both are fine, just they need to match what I need at that point in time and what my strategy for like asset allocation and cash flow looks like. But I've done I've invested in value add, in ground up, in flips, building flips, and single family flips, and storage units, and both in the US and in Europe, and it's very different markets. I did in terms of, and I know this is not relevant for most Americans, right? But when you do invest abroad, for me, I did have I'd say a fail there where I didn't take into account foreign currency and exchange rates. So I invested in a deal in Poland, the zloty, and it was a ground up development deal. And I made like 18% or 20% IRR after like a year and a half, which was nice, not doing anything. But the zloty fell like 15% and I needed the cash. And so I didn't even think about that when I invested. And from that moment, I just decided only to invest in like main currencies like euro and dollar, like nothing else for me.
Yeah, that's interesting. I haven't talked a lot about international investing, and exchange rates hadn't even occurred to me as another, like there's not enough variables already at play between interest rates and markets changing and demographics. And now you got another variable that can change the whole thing. That's interesting. Is most of your stuff that you've done as an LP US based?
Yeah, it is.
Yeah. Well, let's talk about Vyzer. I want to kind of dig into that platform. Who's it for? You mentioned you kind of built it for yourselves and the problem it solved, wrangling all these deals. I'm an LP in, oh my gosh, dozens of deals. So I feel the pain on this. And that was one of the reasons I kind of wanted to talk about this platform. But the genesis of it sounds like it was a pain point for you guys. And so you're building a product around that. But what does it do and who's it for?
Yeah, let me dive into sort of like the problem itself that we're trying to solve and what we experience. All right. So for example, segueing from our current conversation about syndications. So when you invest into these deals, you start to get, all right, first of all, there's a setup, there's investment docs and all that, and you have to store them somewhere, right? But then that's easy, Dropbox, Google Drive, whatever. But then you start to get ongoing emails, like every quarter, every month. And we'd get emails from operators and we wouldn't even remember, wait, when did we invest in this deal? How much did we put in? And then if there's a distribution, does this, like, what did I expect? Is this what I expected? And then each operator has a different investor portal, right? To log in and pull in the information. And so that just became a mess for us. And so, even if that quarterly email came in and I managed to remember, these are good problems to have, right? I can't complain, but they're good problems to have for sure. But a week later or 2 weeks later, the cash will appear in my bank account. And so even if I remembered a week ago to what that was, I'm not going to remember, like, what is this? What's this $5,000 that I just got? And so essentially what Vyzer is, it's this sort of, I'd say, financial concierge or a virtual family office or whatever you want to call it, where I just forward those emails to Vyzer. We have this, so you can just upload any financial document into Vyzer, and then we'll translate that document or that email. It could be a spreadsheet, a PDF, whatever, into assets, liabilities, and then you can link in your bank account, and it will automatically identify transactions and link those to the assets that we set up. And then we'll project your cash flow moving forward, because when you have multiple streams of income, and expenses from different bank accounts and stuff like that, it's really hard to even think about, all right, I have this cash position today, but how will it look a year from now, 5 years from now? Because we've had situations where, again, good problems to have, but like suddenly we'd receive a large distribution or an exit event, and we're, oh shit, I forgot that this money's coming in. Now I have to find a place to allocate it. And a month ago, there were a bunch of deals I need to go find. So the idea is that we like Vyzer, what it does is it automatically projects what things are going to happen based on your expectations from the get-go. And then we'll raise flags saying, hey, this is coming up. You need to be prepared. This is what people like you have done. And so that's sort of like the basis for Vyzer. And then there are a lot of things on top of that. You can add everything. Like you can also link in your brokerage accounts, your retirement accounts, your crypto, like you do everything. The idea is to have this holistic overview for everything. And what we're adding now is a really cool feature that we'd love to have, is sort of the insights onto not just what I have, but what the community of Vyzers have. So then basically the idea is to show for people to anonymously share that information with other people in the platform if they want to opt in or out, whatever. But then you can then see, for example, under real estate, which operators have people invested in, how many people have invested in each operator, how much money has gone into each operator just through the Vyzer platform. Like the money doesn't go through the platform. It's important to emphasize we don't touch the money, but the idea is just to, bring more transparency in these private markets where there's none, and it's all word of mouth. And so that's sort of the premise of Vyzer, and it's going pretty well.
I love it. Thanks for the overview. The anonymous data seems like a really cool feature where maybe you can see, hey, I thought my allocations should be X, this much cash, this much multifamily, this much, whatever you think, public equities, whatever you think the allocation is. But now you're able to kind of see what other people are doing, and especially around the operators. You're right. It's incredible with all the technology that we have, podcasts and portals and sending out ACH distributions and email updates to investors and all these things down to the property management software, that it's still very much a word of mouth kind of situation as far as finding operators. So I love it. I love it.
Yeah, that's why, again, think about it. Like I joined, I pay a nice amount of money a year to be in a community of people that I trust their opinion. Like I'd never know you, right? If I wouldn't join GoBun. Like, so I actually, there's really no way to do it. And that's why all these communities have sprouted up, and people need to share information through that. And there's always this problem with incentivizing, because when you talk about operators, not every operator is incentivized to share that all the information about who's invested with them and how much has been invested with the world.
Right.
Whereas when it comes to the LPs, that's really organic information, and that happily being shared will bring a lot of value to everyone.
Yeah, absolutely.
Well, not everyone. I guess the bad GPs probably won't get value. Sorry, I interrupted you in the middle.
That's a good point, right? Well, like you said, you're shedding light into a very opaque private marketplace, and so that's gonna have certain impact, maybe in a faster way than word of mouth does. Word of mouth negative around a negative word of mouth around a sponsor is going to get around very quickly. Positive word of mouth is going to get around too, but you're just kind of creating another avenue to do that. What do you guys see? Is this your kind of primary focus right now, Vyzer? What you've had an exit, you're a limited partner. What does your life look like now? Is it very lifestyle focused? Is it grinding away at Vyzer for some exit in the future? What kind of how do you see the next year going for you?
Yeah, so not that I can compare anything in the world to pregnancy, but it's sort of like that. They say when a woman gives birth, it's like the most difficult moment in their life. And then there's like some sort of, I don't know, reaction, like chemical reaction that erases that memory, that they'll go through it again. So,
right.
I can't compare. Like, I apologize to all the women. There's no comparison, right? But let's take 1,000th of that is building a startup and going through the grind of doing it, selling it, and then putting yourself back in the same sort of process. So yeah, we are hella grinding it with this startup. This is like, we're building this nonstop. We have a lot of passion for this. We feel the pain. We want to have this. We feel a lot of people experiencing it as well. And so that's our passion, right? I mean, me and my co-founder, our passion is to find these problems that are very, very hard to solve and see how we can bring tech to solve them. But definitely, like the lifestyle I live is that of a 25-year-old tech founder grinding, building his next startup. Yeah, 100%. But now that I have, kids, the balancing is a lot more important for me. And it's a lot harder as well, right? So.
Yeah, for sure. But it sounds like it's by choice, right? You're kind of you're signing up for another tour of duty here, but you're opting in, and you got to do something. I mean, you can't just retire at 40 and sit on the beach. You go crazy, right? So
100%.
Yeah, I love it. What you said about kind of going through the trauma and then forgetting. We have 3 kids, and I kind of feel that way about their early life, where managing 3 children and the business and being married and stuff, it was pretty hectic. And then you just kind of forget about it enough to have another kid. That wasn't that hard. Let's do it again. So yeah, I love it. I think it's a good analogy, but that's exciting. What's the team like? Is this dispersed around the globe? Is it all, because you're spending all your time in Israel, most of your time? What does that look like?
Yeah, I mean, my home base is Israel, but we travel a lot. We're a lot in the States as well. Our team is mainly based in Israel. We also have a team in the US. But yeah, so it's a full-time team. We're venture backed. So yeah.
Yeah, I love it.
Engineers, designers, product managers, customer success people, data. There's a lot of anything you can imagine in a startup like this, we have.
Right. And this is all purely SaaS based kind of recurring revenue model, right?
Yeah, the idea. So what we don't like the AUM based fee, because I feel that creates sort of an incentive for us to convince people to put more information in. Whereas if it's just a flat SaaS model, that's also pretty cheap for the service. So we charge $1,000 a year or $100 a month, which for what we're charging, it's like almost free. But we want people to get the confidence that they're paying for something, they're going to use it.
Yep.
But they're not going to go bankrupt using it, because they're going to get a ton of value also from it. So again, if you don't have that complexity, it's probably not for you. But if you do, you need it yesterday.
Exactly. I think I was just sending K1s off to a lender on a project, and I was like, my goodness. I mean, just dozens and dozens and dozens of K1s and deals that what's funny is all the assets have different names. Then there's the LLC that owns the asset. Then there's the LLC that you invested with as an LP. And then they rebrand the asset so that the day you closed it, it's not called that anymore. And pretty soon you're left with 100 names of things you're trying to keep in your head, which is one of the reasons I want to have the conversation with you. Is like, it's such an obvious kind of market need to fill once you are a serial LP investor, that it kind of like spells itself out on what the use case is on something like that. So
yeah,
I love it. So what's the plan for the company for the year, for the year ahead? Is it just keep growing organically? Is there targets you guys have for 2023, or how does that work for a software based company like you guys?
Yeah, so we have different milestones in our roadmap. A lot of them are product oriented, meaning parts of the software we want to roll out. The benchmarking side of it, which is like really important, and we think would bring up a lot of value, and we want to roll out at some point taxes as well. And I mean, I don't want to dive into everything, but there's a bunch of stuff we want to roll out from a product standpoint. And we're also starting to think of like partnerships with different organizations that either serve this audience or have their own issues. If you look at multifamily offices or like boutique RIA firms, even private banks, like they all serve the same market and they have the similar problems, and the solutions that exist are either like super, super complicated and super expensive or non-existent. And so like there's nothing in the middle, and we're trying to enter that as well. And some other approaches that we're looking at, but I mean, we can dive into that maybe down the road when we start to release that.
Yeah, no, that's exciting. There's sounds like a lot of need there from folks that are in multiple deals and growing their portfolios. Well, Litan, I really appreciate it. It was awesome to catch up. Thanks for sharing your story and sharing the overview of the platform and what you guys are up to. If someone listening wants to learn more, what's a good avenue for them to do that?
So, I mean, I'm pretty, available on, Twitter, LinkedIn, Facebook. Litan Yahav is my name. Or you can check out our website. It's vyzer.co. So Vyzer.co. And you can also drop me an email, Litan@Vyzer. So any medium, I'm pretty available and happy to chat. Okay,
perfect. If you're listening, you can, we're linked to this in the show notes. You can scroll through the description of this episode, click right through to Vyzer.co, or we'll put Litan's information in there as well. Thank you very much, man. This is really cool to dive into. It's an exciting product, fills a very specific need where there's a gap in the marketplace. So wish you guys success in the year ahead.
You too, man. Thanks so much for having me.
Yeah, my pleasure. See ya.
Thank you for listening to the DJE podcast. For more information, please go to djetexas.com.